Before we come back to the stocks, here's our most interesting 2 minutes or 5 minutes of the week, our Did You Know segment. Did you know about a company that made a profit of less than 1 crore rupees in the last 5 years, has tangible assets of just 2.65 lakh rupees, and yet its market cap has surged, hold your breath, 20 times in 24 months. Varinder, you have a way of finding out these naughty companies. Tell us more.
Well, the company I'm talking today is known as Virtual Global Education, a market cap of 670 crores, engaged in educational and training services. If you just map out the market cap, it has increased from only 30 crores in Jan 2013 to current market cap of nearly 670 crores. Of course, education is not the biggest themes if you are concerned about the stock market. So even if you look at other listed education companies in India, this is by far the biggest in terms of market cap. 670 crores for this company, Educom 140 crores, Core Education 70 crores, Career Point 280 crores. So this company is really one of the biggest company. The interesting point is there is a company known as IKF Technologies who is the promoter of this company and hold nearly 18.5% stake. They have been increasing this stake since March 2013. Also interesting is that this company IKF Technologies is listed on BSE and has a market cap of only 27 crores. The stock chart will come on your screen. I think IKF Technologies is only some 16-17 paisa stock, which will come on your screen. But IKF is the promoter for this company. I'm talking about Virtual Global Education. In the last few days, we have seen some Asia Investment Corporation Mauritius buying stake in the open market, nearly 17 lakh shares at an average price of nearly 14 rupees. Also, Virtual Global Education, this company doesn't have a CFO. So how all the surge in the stock price started? Of course, there was allotment, which is the rigorous way of moving up these stocks. And it started in 7th Jan 2013, where nearly 1.35 crore shares were allotted on conversion of share warrants. Then it was on 21st February 2013, where nearly 1.1 crore shares were allotted to promoters and other then promoters on preferential basis, mostly on the face value. There was a stock split which happened in the company. So if you just see that 16 rupees per share, it's actually 160 if you don't adjust for that stock split. Also on 14th August 2013, there was issue of nearly 2 crore warrants to strategic investment on preferential basis. So after all this allotment to promoters and non-promoters, we have seen the stock just moving up considerably. And as I said, has moved up nearly 20 times in the last 2 years.
Okay, what's actually more peculiar, I guess, is the fact that having a market cap of 700 crores, the company, Virtual Global Education, does sales of less than 10 crores per annum. Is that correct?
Well, that is the most important point. If you just see the sales and profit numbers, in the last 5 years put together, this company has not even made 1 crore of profit in the last 5 years put together. So you can just see in your screen, 8.5 lakhs, 5.5 lakhs, 19 lakh, 4 lakh, 3 lakh. So not even 50 lakh profit in the last 5 years. Sales has not been more than, 7 or 8 crores in 1 year put together. The entire revenue is on back of sales of services. So if you're talking about the sales, look at the expenses, because that is also interesting. In FY14, the company spent nearly 8.7 crores. In FY13, nearly 8 crores. I really wanted to know that where does this company spend the money in terms of expenditure. If you look at the balance sheet, they clearly say that the maximum other expenses is due to education and trading charges. So this company actually spends the entire expenses on education and trading charges and earns the revenue from sale of some education services. Now you got to ask yourself that if even this is a virtual global education company, they will have either software, some kind of software with it, or some kind of office where some of these people might be sitting, or some kind of infrastructure where this company is running. Interesting is if you just read the last 5-year annual report and look out the software cost or rent and lease. Interesting is in the last 5 years, there is nil software cost for this company, what they've paid. There is nil rent and lease expense which this company has paid in the last 5 years. So there's nothing what this company has paid in terms of software. I really can't understand these numbers. If you look at the balance sheet, there is no fixed asset. There is no capital work in progress by the company. Go deeper into the balance sheet, you will find some tangible assets what the company has. So the tangible assets are worth 2.65 lakh. You break it up, you will see that there is a plant and equipment which is worth nearly 56,000 rupees. They have a furniture which is worth 31,000 rupees. And they have a computer which is worth 1.8 lakh rupees. the balance sheet is only composed of the intangible asset, which is nearly 11 crores, and that is what they say it's a brand or the trademark which this company has. So the entire balance sheet is composed of only the brand or trademarks, what they say. The most interesting part for me was, if you just see, as I said, the tangible assets are only 2.5 lakh rupees. So if you go into the profit and loss account and check out the expenses, this company having a tangible asset of 2.5 lakh rupees, but on a per annum basis, this company spends nearly 20 lakh maintaining that asset. So nearly 10 times, 15, 20 times, 8, 10 times they spend money to maintain that asset. So 2.5 lakh is the tangible asset. But on repair and maintenance, this company has spent 8.5 lakh rupees. Office expenses are nearly 4 lakh rupees. Printing and stationery are nearly 2.6 lakh rupees. Some postage and courier charges are nearly 2 lakh rupees. So you can't even corroborate the kind of assets the company has and the kind of expenses which are shown in the profit and loss account. Again, it's a very tightly held company where promoter holding is 23%, 146 individuals or corporate bodies owning 43%, and 191 individuals owning 26%. So these three entities, if you put together, they own nearly 90% stake in the company. So here's a company for you, a company commanding a market cap of 650 crores, generating less than 1 crore of profit in last 5 years. No software cost, no rent and lease paid in the last 5 years, no fixed asset, no working capital progress, and the tangible assets only 2.5 lakh rupees.
Very interesting, and I'm very sure some explanations will be called for. Varinder, it was a pleasure listening to every little nugget that you put out. We will watch the future of this company and its parent IKF with a great deal of interest and expect you to fill us in on the details as and when you get them.